Boom, we are alive, ladies and gentlemen. We have a fun little episode today. We're going to jump all around the Ethereum, but more importantly, the second layer scaling solutions that are out there. We've got Matthew Finestone of Business for Loopring. Matthew, how are you doing today?
Very well, Tiho. Nice to be here. Thanks for having me.
It's a pleasure. So I think we're going to have a fun conversation today in the warm-up here. Now, I want to just start off kind of as the layman here in general and ask you, tell me a little bit about what you do and how you ended up in this space, so it can give us some context to where we go next in the conversation.
Great. So I do business stuff at Loopring. Loopring is a team of mostly engineers. We're about 18 engineers, and then a few business folks, or just non-technical people. And we build a protocol on top of Ethereum. It's called a ZK rollup. It's a flavor of layer 2 scaling. It seeks to scale Ethereum, not at the base layer, at layer 1 or 0, depending what you want to call it, but at the second layer, kind of just you have to step up there. And that's where you could do things at higher throughput and cheaper gas costs. So that's what Loopring does, predominantly focusing on scaling exchanges, so trading, and transfers, all the while maintaining complete Ethereum self-custodial guarantees. That's why we exist. That's our biggest promise and principle. But yeah, and I came into it from, I come from a finance background. I was most recently a fixed income trader, so trading government bonds and stuff several years back. And then I got really into crypto on my own and just curious about it, reading about it. I stumbled across Loopring shortly after their inception, and I joined the foundation then. It's funny, people get a kick out of it, but I would just correspond with the team, like, hey, this is pretty cool. How do you plan on doing that? Of course, it looked way different 3 years ago. And then it's kind of just like, hey, you really like this stuff. Why don't you just help us join? So it was very a natural finding of Loopring, and I've been there ever since.
So, I think most people in this sector probably recognize some of the problems with the Ethereum gas fee and the prices as the network congestion increases. And basically, we're looking at a very noticeable dilemma, because you want a chain or almost any interaction of something, you want there to be less tolls, or at least a way to kind of bypass the tolls so that things weren't so expensive to carry out the work. So these layer 2 solutions, like something like ZK rollups, basically what we're doing is, and this is where I'm asking a question, is what we're doing is we're creating like an abstraction in the way we trade. So you're creating like an ecosystem of like an area of the blockchain that you can create transactions on, and then once you want to, you can move it onto the Ethereum chain and then have like a single gas fee. Is that correct?
Yeah, that's quite a good conception of how it works. Before we dive into that, and we'll see how deep we go into the technicals, so remind me to get back to there. Let's just I like the first thing you said is perhaps just the most interesting thing going on these days in the Ethereum world is, okay, high gas fees, it's unusable for the average person. Gas fees, they're the highest it's ever been right now, like every day. So, higher than 2017. Today we're in a 500 or 600 or 700 GWE gas price environment. It's ridiculous. It is prohibitively expensive to do anything. It's crazy. I feel actually sad for people that if they want to send $1 worth or even $10 worth, let alone do a trade or a more complex contract interaction, it's really bad. All that said, and maybe I'm a bit rattled because I've been seeing some of these takes by people on Twitter. They say, oh, Ethereum is unusable. This is terrible. Come use Tron or Binance Chain. So I just want to get right to that, saying this is a good problem to have. Ethereum is the most transacted on, and it is the most, people are paying the most transaction fees on Ethereum versus any other blockchain, right? More than Bitcoin, and everything else is a way long tail after that. that means people want to do, like, they are paying $5 or $50 or $500 to get a transaction through because they value it. Now, it's really bad that we can't bank the unbanked with $500 gas fees or whatever, but it just shows, so we're not where we need to be, but it shows that, like, somebody willing to spend that marginal gas cost versus going to Tron, it shows that there's something worth sticking around here for. So, like, it is too popular. That's its problem. It's bursting at the seams. You have to ask yourself, will Ethereum and all the brain power developing atop or beside it, will they solve it? You have to make your own guess at that. I have mine. I think it's a yes, and loopring is part of that solution. But, like, yeah, these people, these takes that I'm seeing these days of, oh, it's this terrible move to Tron or Binance Smart Chain or whatever it is. That's like saying to, like, somebody that values economic activity or being around people, that's like saying, oh, like, yeah, New York is very crowded and expensive. Like, you should go move to Boise, Idaho, or go move somewhere else. It's like, sure, I can, and then I could buy more land and not, like, sit in traffic or, you know, eat more food, but you're not where you want to be, in the heart of an economic center, go downstairs at 4 a.m. for pizza, interact with people from all across the world. It's like, sure, anybody could go there where it's cheaper, but, like, no, we want to be here. And the fact that people pay the price that this thing commands is a good thing. So, yeah, that's a big digression, but yeah, it's the topic du jour.
Yeah, and nowadays I think people are actually looking to get out of the congested cities and back into the more maybe rural areas. You know, I part of what this elicits is the thinking of the idea of the unicorn versus the zebra. And here's a question, Matthew. Do you know why the zebra is black and white? Do you know what the purpose of that is?
So they become indistinguishable in a pack or something? They blend
Hey,
in?
you nailed it. That's their camouflage. They want to be able to blend into one another so that they can't tell how many, and it's much more difficult to ascertain which direction they might be going away from the predator. And to some degree or another, what we're also witnessing is not just intelligent programmers and developers, but intelligent attorneys and lawyers and people that know some of the difficulties we've had with, say, raising capital. Are you a accredited investor? Some of the global infrastructure that is in the way for some of these simple things. So I've always thought that even though, like, Ethereum is ultimately going to be successful, something like Binance as well will ultimately be successful, because this is an era, I think, of the zebra, where they have a lot more of them that blend in with each other a lot more easily, so that we're a much stronger community in terms of what we've built, right? Because so when the bigger things get, the more the the more fragile they become, because there you can only rely on that one thing. Like, it can't just be Bitcoin. We need multiple layers of way to secure value, to transact, to share these types of information, because just the concept of decentralization itself requires it to be that way. If it was just one thing, even if it's decentralized, well, it's still that just one thing. That's the exact opposite of decentralization. So I always kind of feel that you're right. There's moments where you have, like, lion share moments. You know, my friend started a company that sold almond milk in the United States, and within their first few years, they were the, like, 80% of the market, right? But you still had all these others out there. One of the things I'm interested to see, kind of the sushi swap and the Uniswap conversation we were having earlier, is about how do some of these technologies evolve when they're in the hands of an open source community who are think a little bit differently than most. I mean, so I agree. I agree with you. The fact that gas fees are so high is a proof that it's working, and people trust those contracts, because, again, this is a mixture of the world of programmers and kind of like lawyers, which is these, like Ethereum, the ability to build smart contracts. We've also seen people build dumb contracts, but they accidentally get locked up or something silly. So I think, regardless of who's successful in the long term, because that's always and it could be anyone's guess about the luck of the hat and the draw sometimes. All of a sudden, some brand new invention comes out, and now Kodak is like the bottom of the field for photography. It just, they just sometimes it flies right over when you're looking at things too closely. So, Ethereum is having these gas issues, and with a lot of these companies are looking at scalability, right? So one of the things that is most fascinating, I think, about this conversation is like proprietary deal flow. Well, let's use Binance and Ethereum as an example point. One of the things that was really exciting in 2017 was that you could raise money from around the world. Sure, there's scams, and it's a security. Well, this is where the conversation of the lawyers and the programmers come into play. But it was one of the first moments where we had a cross-border participation similar to the internet, but on a financial sector that wasn't really regulated by anyone's laws. It was just the law of code, and you could interchange these ideas. There's multiple ways to rewrite it. So you saw that Bitcoin came all these other variations, but I guess what's most interesting still is that when people think about Bitcoin as money, they're overlooking the fact that businesses create value through products and services, like having ownership of let's say Tesla stock or something like this, because they bring something valuable to the table, and you want to usually use that money or that wealth to acquire that other product or service that's interesting. So with Binance and with Ethereum in the ICO world, what we were seeing was the launch and the development of some of the new, maybe the Fortune whatever companies that grow up in this particular sector, and that being able to have access to that and being a part of that itself was extremely valuable. So you can stake your Binance tokens and you get rewarded in the new companies that are being launched on Binance, or just like what Uniswap did, you get rewarded for your participation in liquidity. So I think ultimately this open source idea comes into a much more unicorn-based idea. So it took us a little bit of a rant to get back to this technical part. So this is where, like, okay, I can conceptually get that having proprietary deal flow, like if I could stake my Binance tokens, or if I can stake Uniswap tokens, and I get kind of like rewarded in all these different companies that are launched through their launchpad. It's like I'm like a mini VC, right? Like I'm like a mini LP. So these are the financial tools of the elite, or like how much it costs to open a mother venture capital fund, like, or how much it costs to keep up every year. It's ridiculous. And this is kind of out of the box ways to solve a lot of those problems. So the gas fees are a proof that what we have here is an extreme amount of potential value. So I guess I'm in a really long way saying, yes, you're 100% right, Matthew. So with what loopring and there's Matic is working on layer 2 solutions. What's some of the technical qualities to me, someone who can conceptually understand it, but am a total layman to the code? Like, what are we doing different to achieve this, and what does that change for some of the interactions of the way these ecosystems grow?
Right. Okay. No, nice thoughts there. I want to dig into a few of those, the unicorn versus zebra, but we'll get too crazy off topic. So
No,
let
it's
me
okay.
just.
We'll let this podcast roll for as long as possible. The people that want to stick around and listen to it, they'll just let it run. Like, we're having a good conversation. So go as far out there as we want.
Yeah. No, sure. Like, actually, I mean, we'll get back to the Uniswap stuff and that whole like deal flow thing you're saying. It's an interesting way to put it. Like, I guess it is proprietary deal flow, but I could also kind of see it as like the exact opposite. It's not proprietary. In Uniswap's case, it's like, hey, if you used this product over the past 2 years, or even tried to use it and failed, as we spoke about, like that's like a really nice, I find, beautiful thing. Like there's 1,200 addresses that tried to interact with Uniswap, failed, but they're still giving Uni like, hey, thanks for trying to use our product. So is that proprietary? That's Uniswap users or community members or people who are interested in Uniswap. They just got some proprietary thing, but at the same time, anybody, 250,000 addresses are actually getting something, right? So I view it as just the breaking down of proprietary deal flow.
Yeah, no, I
And
meant so I meant the launch pad itself, like
right, yeah,
Yeah, yeah, that was
for
the
sure.
where the proprietaries were being launched, like this company or the whatever, like the same way Binance is looking at doing it as well.
Right, which is it's true, and that's an interesting concept. You're asking them to kind of vet it. It's true. You're allowing people. There's I guess there's so many ways we could slice this thing about allow like a huge narrative, as you know, is this is kind of the first time where retail or anyone with an internet connection, or anyone who's paying attention, but retail, let's call it retail, could be before institutions, right? Just for a number of reasons, because there's not enough liquidity for institutions to come in when something's small, right? They can't move the needle if they buy 100,000 of something, let alone a million, right? They need to really go in size. It's regulatory uncertainty. They don't have that in their mandate, so they can't buy this new SNX token or like whatever. So there's a number of reasons. And now what's even the most interesting, and then there's also just the structural reasons that anybody with an internet connection could buy. You cannot discriminate against anybody in most of these systems, or at least in the best way that they're implemented. But finally, now there's actually a kind of anti-VC rhetoric in the space, which hasn't always been the case. It's not like all ICOs like were automatically anti-VC, but in these like fair launches recently, like starting really with YEarn and the YFI token, the YFI token, it's like that's like the immaculate launch, right? Only it's like even more pure than Bitcoin somehow, right? Like I don't want to say that as like a inflammatory comment, but like right, the guy put it out there and there was no pre-mine, like so there's like a huge there's a real community owned rhetoric, and now a lot of people are of course trying to be opportunistic and replicate it, being like fair launch, but actually there's some tokens here, or they delay the announcement, so they're mining first. Like, who knows? But obviously, when someone does something like beautiful, people are going to try to replicate it, and it gets a bit perverted, which we've seen with all these different vegetables and foods over the past few. But at the end of the day, all you need is like one to be like, whoa, like what a crazy thing. And that, like yesterday to me with Uniswap was another one. They happen so fast, right? Like Wi-Fi is only 2 months old, and that was like a wow moment of like, how did this thing form? And now again, to me, Uni is a pretty like, wow, they're retroactively giving it to everybody. People that just tried to use it, right? So not even like weighted proportionally to how much money you had, but just any person that tried to interact with it. It's so cool what we're seeing. Like this is impossible to conceive in the normal world. Like how could I explain what we're talking about to somebody that doesn't have some base knowledge? It's very difficult, which is actually a great thing that you do, is have these conversations. So hopefully this could seep into public consciousness a bit more. But
Yeah,
and
it's one of those
I still
difficult
didn't answer
parts.
about layer two. Right
No,
after your comments on this, back to layer two.
no, you're right. It took me a while to we'll catch up, mostly because I was busy with a few other things, and it took someone basically sitting me down and trying to explain in a way that I would understand it. I think one of the again, we overlook how much value there is in the new businesses that are being started in this space. And effectively, one of the cool things was that we had not just a global participation, but types of fair launches in companies. You could have never invested in Twitter but now I can basically chart these early seed state startups too. It's crazy. So we've entered a whole new layer of venture capital where we're everyone should be able to participate, and it looks like there's so much abundance here because the circular economies that are, anyways, we could talk for hours about what some of the cool stuff we're seeing, right? Because why is there even any value to the Uni token to begin with? It's nothing but a hallucination. Like people are all just hallucinating that it has value. Just
Right.
so it's a very real abstraction in the way people, I think, digest this stuff, because you have to understand so much about finance and the kind of the bigger game that's been like bonds and lending and loans and the interest rates and the swaps between banks and the derivative is because the financial sector isn't just about money or currency. It's multiple it's just like what we're about to get into, the more technological part. There's multiple layers of finance running, and we get the user's experience of like a paper dollar or a loan from the bank or something like that. That was their old front end user experience, like waiting in a line and seeing someone in their office. This is a much more so the part of the area I always get kind of stuck on is, okay, when I can conceptualize it and we go into the more technical conversations, let's ask it like this. What's the difference between a layer 2 solution like Matic and loopring as a comparative analysis?
Okay, so here we are, third time. You're prodding me to talk about
Well, I just, to some
my
degree, I'm like, I
project.
want
Yeah,
to kind
yeah,
of
yeah.
know how this stuff
That's why
works,
I'm
because I
here.
don't know it all.
Right. No, that's why I'm here. So mostly. So yeah, let's get into it. So Ethereum, or any smart contract base layer blockchain, being layer, let's call it layer 1. Some people could call it layer 0. But yeah, it's congested, and that's where you have, like, your all your activity going through. Layer 2s, just as it sounds, it's a useful term. You get off, in my head, you kind of take a step up off of the highway to a fast lane where it's wider and you're flying. Now, layer 2s, though, in general, there's, like everything, there's trade-offs between the different flavors, and they're a spectrum. So there's a broad spectrum of layer 2s. Loopring is a ZK rollup, which stands for zero knowledge rollup. The zero knowledge comes from zero knowledge cryptography, or zero knowledge proofs, which it doesn't, for people that are familiar with like Zcash or zero knowledge in like a privacy preservation setting, let's forget that for a second. Let's just say that zero knowledge proofs allow you to do computation in a verifiably correct way without showing all the inputs or what goes on in that computation. It allows me to like compute something and give you like a thumbprint of it, like a thumbprint of its veracity or its validity, saying I just did a whole bunch of stuff. That could be things that I'm trying to keep private in the Zcash case and the privacy preservation case, but nonetheless, I'm still showing you a proof that touches on something else that I don't need to see. A ZK rollup does that same thing. It does a lot of computations, and only the output is a succinct proof, which is what we submit to Ethereum. But I've skipped a step. So a ZK rollup says, let's create an off-chain state of the world, another layer, layer 2. Layer 2 is off-chain, right? Like, that's something to consider. And if you think about it, I don't want to get too philosophical here, but Binance is a scaling solution, an off-chain scaling solution, just one with like very poor properties to people that care about decentralization and censorship, right? It's like, hey, give your stuff to Binance, send it to your Binance account, and then transact gas free, right? You're not on Ethereum anymore just because I sent ETH and now I'm buying all these ERC20 tokens. I'm in Binance. That's an off-chain scaling solution. If you think about it, it's weird to put it that way. But yeah, you're just in their database. You have their, the only guarantee you have that you'll get your money back is their reputation, or their, desire to live another day and make another dollar and gain more users, or not go to jail, or all those things, but just very like human things. Layer 2s say, let's do that. Let's send the funds somewhere else. But like, when we're operating in that new space, let's make sure we're like tethered to Ethereum in something just beyond reputation, or like CZ's word and character, or whatever, right? Like, whatever the checks are. Let's use cryptography. Let's use game theory and some economic incentives, but let's tie that layer to Ethereum in some way. ZK rollups live at the right side extreme. And in my head, it's the complete right side. That's the one that says, let's impose the greatest security guarantees on this new layer. On the spectrum of like Binance, somebody just doing it in their own little database, to the opposite is ZK rollups. Let's tie this layer so tightly. let's couple it to Ethereum so tightly that we give up some benefits. Like we can't do everything we wanted. We cannot go as fast as maybe some other solutions. So we're willing to like put some extra like baggage on our backs to keep like what we care about on that right side of the spectrum is being so tightly coupled to Ethereum. And the way you're tightly coupled to Ethereum in this case is by using zero knowledge proofs, these ZK snark proofs. A ZK snark, so I kind of find it sounds like a scary word, set of words I'm about to say,
Sounds
but I
like
think
a gummy bear. Sounds like.
yeah, yeah. It's a zero knowledge, succinct, non-interactive argument of knowledge. It just means it's a succinct argument of knowledge. I know something, here it is in a succinct.
Programmers and scientists always try to make shit sound so difficult so nobody listens anymore. They're just like, what is here? We'll just make this sound really ridiculous, guys.
Yeah, maybe. Although maybe it's just
like a magician. Like magicians do this too. They hide the trick from you.
Right.
It's an age-old tactic. It's not a new thing.
Although that's true. Although we try to really show it, like, but point taken. But let me wrap up this thing so then you could come back out in these questions. But yeah, that's what we just described. So in a ZK rollup, an Ethereum user sends their funds to a deposit contract, an on-chain contract, which maps everything that's in this contract to an off-chain data structure. Our data structure is a Merkle tree, right? So it's like a kind of summary of the entire tree, like the Merkle root. It's just a database with the root at top, and then it has like 2 leaves, and then those have more leaves, and they all have more babies and branches, and you have like a Christmas tree thing, right? And that Merkle root is a summary of the state of all those little branches. Oh, Matthew's Ethereum magic, or like whatever, 0x42 has this many ETH and this many DAI, and Tiho, or has this much tokens. And so it's a mapping of what people put into the deposit contract into an off-chain environment, and then a whole bunch of stuff happens that updates the Merkle tree. The Merkle tree gets updated until it fills up like a batch. It's like the loopring protocol has like a big bucket that you could only fit, let's call it 4,096 is our biggest bucket for reasons of powers of 2 or whatever, things that are beyond over my head. But 4,096 is as many state updates to that tree that we could fit when there's 4,000 things that happen there. So Tiho trading this for that, transferring that. When I say updates, it's trades or transfers. That's all we could do right now. Trading and transfers. When 4,096 things happen, we say, okay, pack it in. We have this, I give a lot of different examples. We have this bus that's now full, or this plane. Then we like compress it. Like you put it through this like black box, zero knowledge proving system where it's over my head, but you're trusting this cryptography that comes from the 80s that says, I will compress this and have a proof of all that stuff that just went from like this state of the world to a new state of the world. Here is a proof that it faithfully followed the protocol rules. Loopring says you cannot steal money from somebody arbitrarily. There must be a signature on a trade, right? All the stuff that we care about. If the proof comes out, that means everything happened okay. Otherwise, it would be stuck in that processor. It'd be like no. The fact that you get something on the outside, a little thumbprint, that is the proof that we submit to Ethereum that says, hey, we just did 4,000 things over here. This is the new state of the world. Here's actually a bit of extra data so you could be sure it's correct. It's this proof that says this is the new state of the world plus a bit of extra data. It's kind of like, this kind of gets a bit into the weeds, but it's almost like like little breadcrumbs that says, just in case somebody wants to know how we went from like that state of the world to this new state of the world, because I know that you believe me because you're rational and you believe in math. So the fact that this proof exists, you are okay that the state transition happened okay. But if you want to be able to go back and say, how did it happen? I want to go back 4 state transitions ago or last year. We leave little breadcrumbs. It's called it's basically the deltas, the changes in between each branch. But just think of it as breadcrumbs. It says if somebody wants to reconstruct and go backwards to last year, what was the state of the world, which is actually important it's an important property, this data availability property. That's why we have a bit of extra baggage. So I wish I kind of didn't bring that up because it makes it go too much longer. But that is a ZK rollup, doing a bunch of things off chain in a verifiably correct way submitting it to Ethereum such that users of your off-chain, of your ZK rollup, only ever need to trust Ethereum. If loopring ceases to exist, turns malicious, whatever, as long as Ethereum exists, a user could say, hey, that's me with my ETH in that deposit contract. Like you submit a proof that it's you and it's there. So that is what a ZK rollup is. I'll leave it there, and then we could compare it to some of the other layer twos where they lie on that spectrum.
Yeah, so not a simple one, but I think you did a great job there. You know, again, some of the reason why I think trying to conceptualize how this stuff works is just so that it makes sense, because inventions too are one of these weird things. Like right now, we're the way we're talking about it, you're talking about transactions and trades basically. But when we first came up with the laser, we never thought we could use it to edit someone's eyeball. So there's a lot of technology kind of evolves into its own thing as the years pass on. Like, I mean, we use it for like discs, reading CDs, a whole bunch of things we never thought it could be used for, because the concept is pliable, right? So they don't have to be transactions or trades. They could be a myriad of other consequential interactions at a level of security where, again, I think contract is the right word for it. Say like ordering something, property deeds, whatever. There's a bunch of stuff that could end up being in these different chains. So I mean, obviously with these really high fees that we see from something like the gas fees to use Uniswap, how far away are we from seeing the benefits of some of this technology on the user front? Because again, we're always at that abstraction where, okay, we can conceptualize it, we can start to come up with new ways to utilize the technology, and again, thinking with the people in some disaster-ridden country, the more fees we can get rid of, the more likely we can start to focus on smaller transactions in particular areas. So, when you're looking at loopring, I guess in general, are you looking at it as a way to create a community with lower fees trade? Like, is that, I guess that's what you'd said. I heard that, I think, in one of your previous podcasts, is that originally loopring was designed to be a kind of like an without fee trading desk, like a decentralized index with no fees inside the system. Is that correct?
Yeah, right. So good points about we don't know where it's going and all that. I really like that laser analogy, or that laser example. But yeah, so I mean, loopring started as a DEX protocol, a decentralized exchange protocol. We're still very much that. We've really dove in. So yeah, it's useful to know that we started as a DEX protocol, right? Keep your keys and your coins, but be able to trade. That was 3 years ago. A year and a half ago, we said we want to be able to go a bit faster because we're building order book exchanges. We want to be able to go more than 2 to 3 trades per second, and that it doesn't cost 300,000 gas to do it. We looked into scalability. Layer 2's ZK rollup was our favorite one because it is the least compromising. It doesn't compromise on Ethereum security guarantees as opposed to some of the others. So first, it's helpful. Okay, so first of all, the way it scales is that when you're doing something on the loopring ZK rollup, so like your account, when you entered the ZK rollup, and you do kind of like enter, I think of it as like stepping up, you are mapping your Ethereum address to this new off-chain playground. Then you're doing things that don't cost gas because you're not on Ethereum. You're in a Merkle tree, and some operator of that database is updating it and not. And then, so you're not paying anything. Maybe you're paying a trading fee imposed by the business side of it, saying on loopring.io, a trader pays a 10 basis point fee. That is a business decision. Like, that is just a business decision. Transfers are completely free. Again, just a business decision. How it scales is that because you're just one of those 4,095 other people, ideally, we could make batches that are smaller, but you want the biggest, it's most efficient. Because then loopring, an operator submits, they have like a fixed overhead cost that they want to amortize over all of those seats. right? So that's how it scales. We do things in bulk. You aggregate a bunch of things, 4,000 things, and you only pay one fee, right? You say, here is 300,000 gas split divided by 4,000 people. That is why a layer 2 scales, by aggregation, or that's why a ZK rollup scales. So that's the first thing. That's how we, just so you know, like, where do gas fees come in out? You have to pay gas to deposit assets and withdraw assets. Again, because you're leaving, whenever you're interacting with layer 1 Ethereum and going here, you have to pay gas because Ethereum, that's Ethereum, you know, you're in Ethereum land still. But once you're just here, you're just trading and transferring, you're basically just filling up a bus that then just has to pay a fixed overhead cost, right? So it's like taking a bus instead of taking a taxi, except this bus could get you just as fast there. The analogy breaks down because it's like Uber Pool, but like everybody magically goes to their right destination. You don't have to like wait for them. But okay, so that's how it scales. It's useful to understand though what the other layer 2, you brought up Matic. So Matic is a plasma, and I'm no expert. I would not want to misrepresent anything, but I think what I'm about to say is mostly true. It's a plasma, which, or would Matic even be called a plasma? But like, yeah, I
I have
guess.
no idea, Matthew. This is why I'm asking.
But basically, the thing, yeah, like, so basically, when you enter, it's very similar at the beginning. You enter the Matic world, the Matic off-chain world, but
Yeah.
there you are not just like in a Merkle tree that is only dependent on like a proof being generated to transition the state, right? Like in loop rings, in the ZK rollup, nothing happens unless something was cryptographically proven to have happened. And then there's a new state of the world. We say, okay, stuff happened. In Plasma or on Matic, when you enter that world, you are entering another chain where there's a different validator set. So you are inherently trusting that there's new nodes, right? There's new validators, nodes, get whatever you want to call them. I'm not sure what they're called, but you're going to Matic where you are dependent on, okay, there is 10 or 20 or 100 or 500 Matic nodes that is keeping consensus and updating the Matic chain and the Matic state of the world, but according to a non-Ethereum distributed consensus. And it's still tethered to Ethereum, but it has its own consensus. There's different rules there. You are no longer just relying on Ethereum for the fact that the state could transition and your balance will be updated, hopefully, faithfully. You are relying on their consensus system, their slashing mechanism, whatever it is. Again, I don't want to misrepresent. Maybe it's really tight. The fact is, it is not just relying on Ethereum plus a branch of cryptography or mathematics, which is what ZK Rollup is. You're relying on a new validator set. Whenever you introduce a new validator set, that might be very cool. That might allow you to go like more flexible. They could probably go faster than us. I'm not even sure, but I bet you they could go faster than us. They could be more flexible. Like you kind of could do like more things on there.
Right.
But you are saying, I trust Matic on top of Ethereum. In a ZK rollup, you're saying, I trust Ethereum and zero knowledge cryptography. So that is the spectrum.
Okay, nice. So whereabouts are you guys now? I mean, you guys have had a fantastic run in prices since the breakout in July. And well, I mean, the whole market has been on fire, which is nice to see. Where are you guys at in development? And I guess to some degree, what's where do you think the roadmap takes Loopring and Ethereum over the next like 12 to 24 months?
Right. Okay, and this goes back to your laser question about like where will we end up. I answer all your questions, just one question later, always. It's so okay, so interesting. So Loopring started just as a protocol. We were building just open source software that anybody else could build on. In February, we decided to move up the stack and actually operate a product atop of the ZK rollup. So we deployed the ZK rollup in December 2019. Okay, then in February we said, let's build an exchange on top of it. Let's not wait for everybody else to come, which is kind of a theme you're seeing these days. A lot of protocols move up the stack and operate their own products. Synthetic exchange on top of Synthetic's protocol. 0x released Matcha. So we released like the loopring exchange, which we, the team, built on our own protocol. So we became, so that's just, I note that because we also became protocol, product people for the first time ever. We weren't just building, you know, this free software for hopefully other people to use it. We're going to use it. Here's our exchange. And to be clear, so loopring.io has been live since late February. It is an order book exchange. When you go on it, you'll feel like you're on Binance or Coinbase Pro, not like a simple swap mechanism necessarily. Although we actually did just release an alternate UI, which abstracts everything and just shows you that. But you go on there. And what I like to say, like the simplest way, like I could have described loopring, and we are Coinbase Pro or Binance, where we cannot do evil. We simply cannot leave with your funds. So you go there to trade fast and cheap, and there's no gas, and you're just paying your trading fee, and you're deploying your algorithmic strategy, and you're trading 100 times per second, like however fast you want. And we could never run away or be regulated into oblivion. Even if something terrible happens, natural disaster, our servers go down, we like whatever. If Ethereum exists, users say, oh, that's a shame. I really liked using that product. Good thing I could withdraw my funds from Ethereum. So that's our product. Then we tacked on the ability to not just trade, but also to transfer. Once you're in the ZK rollup, this was, you know, we never thought of ourselves like, okay, let's do transfers. It was honestly the Ethereum community. And I like to say, like, really, Vitalik was a big proponent of it. Vitalik, you know, we were at that time the only ZK rollup in, let's say, May or June. This is when gas fees were creeping up. And he said, hey, loopring, once people are on your rollup, why don't you just allow them to transfer, not just trade? And we said, that's actually a really good idea. Like, it's very doable. He of course knew it was doable. He knows our tech very well. He's a great ZK rollup thinker and like originated lots of the ideas with other Ethereum researchers. But so we enabled transfer. So all of a sudden we became a payment app or a payment protocol as well. So really, like 6 months ago, I was like, so it's 2 years ago, loopring is a DEX protocol. A year ago, loopring is a scalable DEX protocol. Now, loopring is a scalable exchange and payment protocol. So you kind of see, like with your laser thing, we're really adapting. And here's the final expansion of our identity. We are building a smart contract mobile wallet that wants to distill this exchange ability, this payment ability, into a mobile first product, a smart contract wallet, right? So not just a simple externally owned account is the term for like a naive Ethereum address, but a smart contract wallet where you say, I am a guardian of it, Tiho is a guardian of it, and Robert is a guardian. Us three own the smart contract, right? And like here, there's no seed phrases. There's just like social recovery. So if I ever lose it, I just need Tiho and Robert to turn the keys, and that's what. So smart contract wallets, it has a whole bunch of nice properties. We want to bring our scalability into there. So that's like that's the big thing on the roadmap. To be honest, it's out. The team is using it. It's like in a small alpha. It's really cool to be able to have like an Ethereum wallet where you could trade gas-free, transfer gas-free. It's sweet. It's still a bit rough around the edges. That's why we'll launch it hopefully within a month. I keep pushing this back. I'm not that typical soon TM guy, but like it's working. It's there, but like it's just not really ready yet. It's only going to be on Android at first, but yeah, that's a cool thing. So here, all of a sudden, loopring was a DEX protocol. Now we like a different like arm of the team or of the project also has a product, a smart contract mobile wallet coming out. So that's really cool because we think that could compete with, forget just competing with like our crypto compatriots or competitors where it's like we're all fighting for the same like crumb. It's like this friggin' outcompetes Venmo and Robinhood, right? Like we want that type of power, like compete with like fintech legacy applications where you could just do things, right? Gas is abstracted because there's no gas on our ZK rollup. You're just doing things and you're competing with the heavyweights, the incumbents, not just all fighting for the smaller. So yeah, that's what's up now. And I should say we have a big protocol upgrade. For the first time since we deployed the ZK rollup, which was the first ZK rollup on Ethereum in December, we have an upgrade, protocol version 3.6, which is code complete right now, entering audits, and it just does a whole bunch of things for greater usability and flexibility. If you want, we can discuss some of the benefits of 3.6, but like version 3.6 plus wallet equals, in my opinion, a very strong product. That's what we're excited about. Those are the two things. That's all we care about right now. Version 3.6, getting that wallet out there.
Yeah, no, it sounds fantastic. It's a big deal. I mean, this whole sector, I think we probably are just like the laser. We're going to discover there's so much extra to this stuff as we go forward. Just in you know, I always kind of childishly poke fun at Bitcoin. It's just like a giant fucking digital collectible. Essentially, it's like they're all like we're looking at the original Beanie Babies, the first one of a kinds on the internet ever, and you can transfer them and you can save them places, but effectively they're collectibles. And that's why it's so holds so much value is within that cryptographic collective effectively. So it's good to learn more about this stuff because it's always so confusing, especially for someone like I consider myself fairly intelligent on a good day, and on a bad day not so much. But when I'm trying to understand this stuff and what we can expect to see from it in the future, these areas of how do we bring this service to the people that need it the most. Like, for instance, you and I aren't necessarily the people that need cheaper fees, but it's very easy to tell that there's like, say, I lived in Canada for a little while when I was younger, and you'd always see people from Guatemala fly up to work, and like in the orchards or something like this, and then to send money home, they're just getting smashed on sending should cost nothing, especially now with this digital age. Like, you saw what VoIP inevitably did to the telephone service, or what an internet is doing to the media services. And financial sector is just one of the last vestiges that hadn't been totally digested by the tech world, because it has so much power for so many people. Whereas now it's kind of been, it's like Pandora's box. We've opened it up, it's running out in the wild, and it's up to the programmers and the community, I guess, most likely, to find the way that it's most valuable for them to use. Like, again, like first off, it's ridiculous that we can even edit someone's eye, but you can do it with a laser after we discovered it. Like, what the hell? We're such an innovative and creative species, and we're having a tech boom right now. And it's such an important time to learn about this stuff, because it's going to outpace our ability to learn it. So the more you can understand it, the more you can participate in these early things, to keep track of where it's going, the better you'll do, not just as an investor, but as an individual who can take advantage of these opportunities in time, because they're not rare, but they're not here like every day. They come in waves effectively. So, Matthew, I think what you guys are building sounds great. And I think taking that mixed approach to both the protocol and the UI development is smart, because this is where you have one of the big gaps again, is you have people that would normally want to be building in this sector that don't know how to write that code back and forth. And we talked about this in the beginning of the video before we press record. But to me, one of the exciting things is, how do we create services like this that help someone after, like, disaster relief, for rebuilding economies. You can just basically, we've created almost like drop ship economies in cell phones with this type of infrastructure, but it's about getting it to a point where it's more, where people can use it without really knowing that they're using it. Like, I can't imagine what would happen if PayPal all of a sudden turned everything into like PUSD, and then now you're getting 8% APY on your savings in PayPal. PayPal would become one of the biggest banks like overnight, because it would rock the financial world. So we're at the very early stages of just like rocking the financial world with what some of this stuff can do, because that old banking sector really hasn't had yet to been digested. But this is what the start of it looks like. Matthew, I had a really great time chatting with you today. I don't want to go, I don't want to go on too long, because we can just continue to chat in the background, and we'll have you guys on again as things develop. I'd love to see the front end facing aspect once the wallet goes live. But is there anything else you think we should check out? Like, I know we follow you on follow you guys on Twitter. We got that one down. What else should we be aware of, Matthew?
Yeah, sure. Thanks, Tiho. I really like what you said, first of all. Yeah, I mean, people can use it right now, right? It's really cool. Like, I'm ecstatic that I could see every day how many new users enter layer 2, right? Like, because you see, oh, a new address is now in your Merkle tree. Like, we have 5,200 and something users, which is, relatively small, but those are like really bleeding edge people getting onto, the ZK roll. So yeah, like loopring.io is live today. You could go there, register an account or activate an account. That just means mapping your Ethereum address to that off-chain environment, as we spoke about. Then you have to deposit assets into the contract that gets mapped to that environment. So look, I really want to tell all the listeners, get there now, escape these 700 Gwei gas fees. But I'm slightly sad that getting on for the first time and depositing costs gas, which is really expensive today. Like, what a paradox, right? It's like, come here for fast and free, or like gas free, but it's going to cost you, like, literally today, I'm slightly embarrassed to say, it's going to cost you above $30-40 to
Yeah.
get onto that new plane. So thankfully in version 3.6 we reduced that by like a factor of 500. So next time we speak and I say, hey, come to loopring.io, I won't be like, but like, if you don't want to spend $40, then don't. I could just say like, yes, get there. But the fact is, there's a clear break even, right? Like, if you're going to spend, if you're going to do like if you're going to do 2 trades on Kyber, that will cost you more gas than just setting up your entrance fee and then being on Loopring. Again, assuming there's liquidity and there's all the pairs you want there. But yeah, so look, it's live there. If you go to loopring.io, you can play around with it. I'm sorry that today it costs a lot to get on there, but once you're there is when you could go fast and free. And yeah, so that's what's going on now. Q4, keep an eye out for that protocol upgrade, which will make it cheaper to get on board, and the wallet. But yeah, that's it. Loopring.org on Twitter. I'm what am I? Finestone Matt on Twitter. But yeah, it's been a pleasure. And look, at the end of, like, just to say about the thing, like, you wrapped it up nicely. What we're trying to solve, it's become much easier for me to explain our value proposition, especially if somebody already values Ethereum. You'd be like, hey, you see all this cool shit going on in Ethereum that like everybody loves and like literally can't get enough of, to the point where normal people are priced out from using it. We will make it usable again without sacrificing the properties that made it interesting in the first place, right? Like, very decentralized, censorship resistant, incredibly neutral, right? Can't be just like upgraded by a few dollars, like the rug pulled from underneath you. It's like, we just want to make Ethereum again and get ready for the next billion people to come on it, right? So like, Ethereum's popularity really makes my job easy to be like, yeah, look, this is crazy, right? You can't use it as a user. You can't build on it as a developer. It's too popular right now. ZK rollups are one way that we will make it itself again without sacrificing those things. So I just want to say that as like our value proposition. And honestly, we have amazing peers in the layer 2 rate. Like, Matic's great, but even more in the rollup space. Like, there's other ZK rollups like Matter Labs and Starkware. Like, the pace of innovation, even in the little niche of ZK rollups. And there's another type of rollups, optimistic rollups, which we didn't have time to get into, but we'll say that it's unbelievable. Like, what's going on? It's like, I'll leave it there, but yeah, it's unbelievable.
Yeah, no, it's good. It's nice to see someone who's excited about it and able to help us understand, where it's going, what it looks like, and then, again, look at it and understand that we don't know how this stuff evolves. The best thing to do is just try to watch it and keep an eye on all these different evolving aspects of this ecosystem as it goes. I think it's the open source community is definitely much more interested in collaboration than most of the older sectors too. So we're seeing a really unique I think integration of what like that area looks like. You definitely need a shirt that says "Make Ethereum again." That would be hilarious.
Yeah. Funny you say that. No, I'm kidding.
Yeah, right. Yeah, I hope so. Well, that's it. We're getting you a shirt, Matthew.
Yeah.
It was a treat chatting with you. We'll share this video. Remember, everyone, give us a thumbs up if you like this content. Give us a thumbs up if you don't, because either way, YouTube does not care. They just like the algorithm feed. So give us that feedback and leave your questions, your comments, and I will do my best to point you in the direction. The comments for Loopring and Matthew will be down in the description. So check that out if you want to follow them. I suggest to do it anyways because, again, pace of innovation is very quick here. So you need to keep your eyes on the car that are moving very quickly. Yes, and Matthew, again, thank you for joining us, and hopefully we'll have you again on in the future. We can share some more good updates.
Thanks so much. I really appreciate it.
My pleasure.